You've probably seen Greg and I harping on the price of gold. A lot of different people are sharing predictions out there. Robert Kiyosaki has it going up to $75,000 an ounce. This one's a little bit more conservative, but it's still over a 2.5x from where it is at today. This one today is on kitco.com, and the price is predicted to hit $5,000 in 3 years. And we're also seeing a prediction to watch out for the default wave, kick off a US recession in the fourth quarter. Now, this is by Michael Lee of Michael Lee Strategy. Michael Lee is a New Yorker. See, there he is again. This guy is a big deal. I follow him, and you should too. You should also follow Greg and I. Please hit subscribe on that button down below and continue to watch our economic outlook as we bring it to you live from Facebook. So let's dive into today's article. Something that really hit me hard was a part right here where they start talking about the job reports. And just watch this segment coming in right here. I'm curating this video. It's over an hour. I'm going to show you the best parts of it and give you my take as well.
Okay, so let's break that down, because the labor data is creating an impression that the economy is looking pretty strong, but you've pulled up some charts that indicate otherwise. Go through those.
Watch this right here.
Yeah, so the first one I have up is the monthly job change from the original revised and re-revised prints from this year. Every single time a report came out, it was later revised lower. So you have expectations of, say, 250,000 jobs in February. We come in at 311. It's revised to 326 the next month, and then after revised to 248,000. Okay, that has happened every month this year.
That is a red flag right there, you guys. This is the media and leadership skewing the data to provide hope every time they release a report, and then they revise. Now, the reports come out and everyone's all happy and jolly and lucky and cheering on the economy, but then they're quietly, very quietly, revising this outlook, which is a very dangerous game. Let's continue.
Where all these numbers have been revised lower. That is a 12 sigma or 12 standard deviation event, basically meaning you're more likely to get struck by lightning 4 or 5 times on the way to work than this happens.
You guys just hear that? For all this happening, all these lies they've told us, all these revisions, you are more likely to get struck by lightning on the way to work than this playing out. That's just what was told right there. That's mind-blowing to me.
And so you have to ask yourself at a certain point, is this government bureaucracy and is this a flawed model, or is the BLS cooking the books to favor the Biden administration?
Well, I mean, you have my opinion right here, you guys. I mean, I think the Biden administration's done a horrible job. I think that the way they handled COVID and everything else in between has been absolutely ridiculous. And I know that's an opinion that a lot of people on the other side of leadership is not going to believe, but I know a lot of my friends that are Democrats that have switched to the other side and are just cheering for this man to get out of office. This is not a political channel, you guys. We're talking about investing in precious metals, the economy, inflation, everything like that. But it does get political. Let's be very honest. This comes from above. And I'm not talking about the higher powers. I'm talking about leadership in the United States. This is very scary times we're in right now. You need to be very careful where you're at, where you're investing. People are calling for the bottom to fall. This man is calling for a recession to kick off in Q4. Guess what? That is right around the corner. When this man says in 3 years it's going to be 5,000, what are you waiting for? Are you waiting for your stock portfolio to drop? Are you waiting for everything to fall off and you have nothing to invest? For me, I'm safeguarding my retirement by investing a little bit in precious metals every single month in my precious metals IRA and physical stuff that I have at home in a vault, also in a safe deposit box in the bank. So that's what this is more about than anything else. And I'm not trying to get too political with this, but unfortunately, it does happen. The stuff comes from above. Reports like this come out. They provide a lot of false hope. Americans start making moves. And then guess what? We are going to get the hammer put down. Let's continue.
I just put up another chart. It's credit card debt. We are at absolute all-time highs. And
that's scary right there, you guys. People are spending money that they do not have. Everyone got PPP money. They put it in Bitcoin and stuff like that. I know a lot of people who did that. You see the fraud everywhere. The money is not out there. These reports are so manipulated that a lot of states, they say, are already in recession. Let's continue.
Then we'll go to the next one. If you look at the rate of change in delinquencies on credit card debt, like you're already there. There's a large portion of America that's completely tapped out, right? And
a large portion of America is completely tapped out. You guys, it's coming.
It's as you start seeing more and more corporate defaults. See, once a few major companies start to default, right, and you're already seeing this from the SLOSS, the Senior Loan Officer survey. I'm forgetting what one of the O's means, but basically, how much are banks willing to lend? That's tightened up dramatically, right? And so that's really starting to creep into the economy. And if you can get a loan, it's at like an ungodly interest rate. So that's really starting to kick in, and it's, you typically need about 18 months into the inversion before unemployment, the wheels really start to come off on unemployment, which puts us towards the end of this year. And there's sometimes some cycles have been before it, some cycles have been after it, but we've never had an inversion like this without some sort of recession. They say
the R word, there it is again, recession. It is coming. This is not the only mind saying that. The smartest people out there that do this for a living are calling it. The government's trying not to say anything about it. It's happening, you guys. We are so far behind. Banks will collapse. We saw 3 collapse already this year. There are more coming. This whole video is incredible. You should watch the whole thing. Again, I'm going to give you a couple more highlights here before we sign off. So now we're diving into the R word even more. We're talking about the 2001 recession, the 2008 recession, and the one we're about to hit right now. And Mike does a great job of talking about it and tells you exactly what he thinks is going to happen.
Well, so in 2001, it wasn't massive on par with 2008, right? So I would say this recession, in my mind, would mirror that of a 2001 recession without 9/11. So we were already entering recession going into 9/11, and that certainly accelerated it.
It totally did. I moved down to South Florida after 9/11, and I had plans of getting in the hospitality industry, and that evaporated. Luckily, I got into marketing, did very well with that, and here I am. Couldn't be happier, but that was a very scary time because I moved here on a whim, and I had planned before 9/11, and hospitality, as you know, travel was never the same for a few years.
Right, so the nature is that once every 6 years, companies get over-levered, they get cocky, they overexpand. The Fed, as the economy is overexpanding, the Fed raises interest rates to slow down growth. Higher levered companies have a tougher and tougher time refinancing their debt. Once they default, there's some liquidations, layoffs, and as they start laying off people, as the labor market starts to deteriorate, spending declines, and it causes more and more defaults until the Fed finally cuts, and then we start all over again. And you need those default cycles to kind of clean out the bad companies, and so you don't end up with a bunch of zombie companies. And I believe the Fed is making a mistake with their bank liquidity programs, because the whole point of quantitative tightening, the whole point of this rate hiking cycle was to flush out the excess, right? So everything they've done on the quantitative tightening side, they've undone with their bank guarantee and bank liquidity programs. So it's taking longer and longer to get there, but I still don't see how we avoid it.
Powerful. He does not see how we avoid this. And there's a lot of people out there just hanging on. They owe money. They've got SBA loans. They are not liquid. They are laying off people that they hired during COVID that they got because, again, PPP money was injected into their company. They printed trillions of dollars. And here we are today. Now, in closing, this is the most important part of the video, so make sure you guys pay attention and hear me as I sound off on this one as well. We're going to talk about what you should do now, where you should invest. And this is one man's opinion. Obviously, you can find your own. We just talk about what's going on in this channel. You guys are wise enough to make your own decisions. But let's talk about what someone who works in New York, has his pulse on the economy, is doing with money right now.
Should an investor be doing, and this is not financial advice, but how are you positioning portfolios in order to best be prepared for the scenario that you're playing out?
Yeah, I mean, this is one of the most difficult periods to invest I've ever seen. So for me, I'm looking at a lot of alternative investment strategies, asset-backed lending funds that are paying double-digit yields. In terms of a couple individual stocks that I like, I really like NVIDIA. I've never seen anything like this in my life. I think Truist in itself is cheap, but the XLK, the tech sector, that is dominated by these massive names. And I think in these times of crisis where interest rates are so high, and you have a particularly regulatory friendly administration, the moat around a Microsoft, the moat around a Google gets bigger and bigger and bigger. And so that, you can find safety in those big names. right? Because the way that Google is growing and the advancements that they have in quantum computing, plus of all their different tentacles and everything, it's actually kind of a cheap stock, especially relative to the other Magnificent Seven. But in that type of market, obviously, the way that I'm playing gold for my clients right now is buying an ETF called IGLD. It writes covered calls against GLD inside of it, so it produces a 7 to 9% yield. So that if you're stuck waiting in gold and you don't get this breakout that I think we need, I think we should have had.
When he says that, there's a lot of talk, and if you read this article as well, again, it's on kitco.com/news. It was published on 9/11. There's a lot of talk about suppressing purposely the prices of gold and silver, that they should be much higher. And there have been a lot of people indicted for this many, many years ago. So that is a very key factor to remember, and that's why I hold gold and silver.
You're paid to sit there and wait. But in this recessionary situation, particularly with the likes of China looking really ugly, with Europe looking really ugly, at some point, there's going to be a flight to safety. I think that pushes gold higher, and then we're off to the races.
Okay.
Off to the races. That's what I'm looking for, and that is a great end cap on that. You guys, I have physical gold and silver in safes, as I mentioned earlier. I also have a precious metals IRA. If you're looking to get into that, Greg and I have been covering the space for a combined 20 plus years. We have many videos. This isn't the only one. Check out the one Greg did on Robert Kiyosaki as well. It's astronomically just awesome if you're a precious metals investor. We have a quiz below you can check out. If you're looking to hold gold, silver, other precious metals in your portfolio, whether it's at home or inside your retirement, which I'm a huge advocate of. I have one with Goldco. Basically what that does is I can take, let's just say I have, for round number sake, $100,000 in my retirement. If you put 5 to 20% in your portfolio, I'm around 17. Again, we're just using fixed numbers here. That is going to be a part of your portfolio that, as Mr. Lee is saying, is going to rocket up, possibly 3x. Robert Kiyosaki thinks it's going to basically 20x if you look at the other videos, while everything else tanks. So can you afford not to hold gold and silver either in your IRA or physically? And again, we've got companies that do both. Highly vetted, highly recommended. There's a lot of bad apples out there in this industry, but we have curated the best. We are personal investors. This is all we do, you guys. That right there was an end cap for me, and there's no need to watch the rest of the 12 minutes of the video and curate that. But this alone is yet another warning. Don't say we didn't tell you so, right? Don't say we didn't tell you so next year when you watch this video and you're looking at your portfolio or lack of it, and it's drying up, and you're looking at your retirement savings and it's drying up and it's nowhere near it was before. Listen to the tech stocks that he mentioned there. Again, this is not financial advice. We're curating what's going on out there in the world. But if you do hold precious metals and the economy tanks, you can watch from history. It's all proven. No fiat currency has made it. And I'll close on this. One thing to do not treat your portfolio like you treat the weather. And what I mean by that is, right now we're here in Florida, I am at least. Ironically, Hurricane Lee, not Michael Lee, but Hurricane Lee is hitting the eastern seaboard, right? So everyone's paying attention to it. It's not going to hit Florida. We might get some rains. We might get some wind. We didn't know about it until this week or last week. Now we're paying attention. It is never too soon to pay attention to the future when it comes to your money. And by that, I mean you need to safeguard your portfolio with precious metals. Greg and I have been doing it for years. We've survived economies. I personally tell my story in many other videos how pretty much everything was lost 2008. I learned from it, I got better from it, and I'm in a much better spot. Thanks for watching, and we will catch you in the next video.